Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on Canadian MJ, and I've been covering them less because there's less action and less to talk about, but we're looking at CMG, MT, ACB, APH, OGI, EMC, CMED, and MJN. So CGC and MT, the deal went through. I believe there's one more hurdle to jump over, one more approval that needs to go through, but the market doesn't care. It was priced in. Everybody was anticipating it would happen, so it didn't really get much reaction to the news. Look at how tight this range is getting. We are still maintaining the higher low pattern that started back at the end of December. We had 851, 895, 941. Most recent higher low that the bulls need to hold is 966. So we are still above that level. We're still holding the middle Bollinger Band support. That level is 986. And as long as we don't break 966, bulls are still in control on the daily. You can see the Bollinger Bands are getting extremely tight. So if those continue to tighten, we're either going to trade sideways with tiny volume and tiny volatility for a while, or we're going to see a high volume spike and a clear breakout or a breakdown. The last bounce attempt, where we got up to 1048, did reject from that upper Bollinger Band, so we know it is solid resistance. We have not been above the upper Bollinger Band since back on the November breakout. So that's some solid resistance. That's up at 1039 and tightening. And in terms of support, we did close below that lower Bollinger Band support just one day, but it did act as support, holding the price up, and that's where actually the trend turned around to start favoring the bulls. So as of right now, the range I'm watching, 966 support, 1048 resistance. The past 4 days we've consolidated, pretty low volume, no big red flags for the bulls. Weekly time frame, lack of follow through in terms of the bullish week previously. So it just looks like the bulls are running out of a bit of momentum, but there's no red flag until we break the higher low pattern, and that rests on 966. So MT certainly not going to be trading for too much longer if this deal does go through, but it too is maintaining higher lows, looking at 651, higher low of 675, and now bulls want this higher low of 698 to remain in place, but we could still test that level again. As long as we form a higher low compared to 675, same story, and resistance is up at 730. So bulls are still in control of the trend, even though we pulled back most of this week across the sector. Bearish reversal inverted hammer on the weekly time frame, showing a little upper wick of profit taking. If we see a red week, we will confirm that next week. But we've been holding this exponential moving average support on the weekly time frame this entire breakout, and that's going to be entering, that'll be up around the upper 660s come next week. That will be the level to hold on the weekly time frame to keep the bulls in control. ACB had the bearish reaction to the dilution, the raising of funding, $60 million. So a big gap down. If you're a long-term investor, this doesn't really scare you too much. It's $60 million of working capital. They're going to have their facility up and running ideally for when recreational becomes approved, and they'll be ready to go. So long-term, a good thing, but short-term, a bad thing. And they do have the highest share count. I think we're up to 240, 250 million at this point. But that's why the price is down at $2 and not up at $9 like CGC. So we did break the higher low pattern. I have exited my entire position on ACB, locked in all that profit. I locked in half the profit when we were up in the 260s, and I locked in the second half after I saw that there was no follow through on this bounce. Now the bounce that played out, we had a really nice oversold bounce, and we knew to be scouting for a bounce after the gap down and the big push to the downside. And look at the previous resistance acting as support. So resistance was 230, 230, 229, and that's where I made my bull entry as soon as 230 broke after we had 4 days in a row topping out at that level. So I made my bullish entry on January 3rd, previous resistance acting as support as we bounced 1 penny above 230. That's where the bulls started buying, and there was a nice little day trade opportunity from that level, but obviously no follow through from the bulls, and we're closing down near the low of the day the previous 2 days. So support is 230 and then looking down to 221, and we did lose this higher low pattern. The bulls would have had to have held 251 to maintain that higher low pattern. The bears taking some control in the short term over ACB. The weekly time frame, you can see that high volume dump. That volume's concerning. Clearly there was a lot of dumping going on with that news of dilution, and we're waiting for the bulls to establish a new level of support, as the way we ended the week near the low, not convincing heading into next week. APH is also seeing some bearish action. The higher low level to hold on APH is 521, and we did break that level by a penny today, but again, I'll give a little bit of wiggle room of a penny or two, and we did close above 521, still maintaining that level. But if we see further downside on Monday and lose 520, the bears are going to start taking over the trend again, and this uptrend from the end of December will be broken. So every single day this week was red on APH, and we closed fairly close to the low of the week. So 520, and after that level, I'm looking down at $5 psychological support. The weekly time frame shows that bearish candlestick. The red Marabozu showing the bears controlled pretty much from the open to the close, still maintaining exponential support, but just barely. We did close a penny or two below that exponential support on the week there in December. So if we lose that level again, it is a bit of a red flag for the bulls. So APH is close to breaking its uptrend. CGC still holding it with MT. OGI broke its uptrend long ago, and it hasn't broken the downtrend yet. It's making the first signs that it's going to do so. And I'm seeing here a base of support built at 260, 261. And trying to break this lower high pattern, I'm looking at 283 and 285. The high of this bounce attempt, we had the gap down news, bearish reaction to the pesticides. A bounce, we topped out at 285, which was just another lower high. Then we had a bullish reaction to the financials, topped out at 283, just another lower high. But now we ended the week fairly strong, and if the bulls can break 283 and 285, that will be some nice convincing action that the lower high pattern has broken on the daily. So struggling right at the middle Bollinger Band on the weekly of 272. We did close above that level. No other major name is close to losing its weekly middle Bollinger Band support. You look at CGC, and it is still leaps and bounds ahead of that level. ACB, even with the bearish reaction, well, actually, due to the lack of price history, we don't have ACB's middle Bollinger Band on the weekly, but you see APH well above that level as well. So OGI is potentially close to losing that level, must continue to hold it over the next few days, or I should say the next few weeks, because if we close below that middle Bollinger Band, we're looking down at that 260 level and then 251, and the bears could be taking over if we lose that middle Bollinger Band. But again, the daily chart, very close to breaking the lower high pattern. Bulls have a little bit of hope, and I would certainly rather be in OGI where we currently stand for a short-term trade than I would be in ACB after that bearish reaction to news. So in both examples of OGI and ACB, breaking the correlation with the overall sector and standing out as lead bears now in terms of the daily trend over the past 6 weeks, both of those occurred on news-related events. So everybody says, you know, it's news that drives these charts, and that's definitely true. News is a huge factor, but we're seeing the news show up on the charts with these big gap downs, and they are changing the trends to favor the bears. So EMC, I'm being very patient. I'd like a position in EMC. I like the exposure to the pharmaceutical aspect of the business, but not ready yet. I don't like it here. We've got support of 385. We bounced off that multiple times, 386, 386. So if 385 breaks, I'm looking down at 350. And why 350? Because on the IPO day, and I know it wasn't an IPO, but I'm going to call it an IPO, on the first day of trading, We broke out and then we consolidated and bounced off. Actually, we found resistance at 350 first. Then we broke out to higher highs. And then on the back test of 350, we held it as support before eventually losing it. And then on the break of 350, we back tested it, bounced off 352, and then continued. So that's enough price action for me around that psychological 350 level that's the next place that I'm looking after 385. And if we break 385, I will be scouting a bullish entry position around the 350 area. Resistance, $4 psychological. We've closed below $4 at or below $4 over the past 4 or 5 days. So that is a clear resistance level. We can see this MACD, or this middle Bollinger Band, I should say, is beginning to level out, and it's going to begin descending. If we can't get over that level, if we can't get over $4, we're going to see further downside. Need to double check when EMC shares become free trading after the trading began back in December. I don't have that date off the top of my head, but before thinking of a bullish position, I would absolutely be aware of those dates, because I would expect some selling heading into those dates as the market prices in those shares becoming free trading. Weekly time frame continuing to consolidate. Low of the past 2 weeks, 385 and 386. So if we lose those levels, we know another leg to the downside is likely coming. CMED had a nice trading opportunity this week, very clearly bullish action. And the signal here on CMED, we had the dump on its IPO day. The high of the bounce after that dump was 1143, and then we consolidated. So 1143 then becomes a very key level of resistance, because to set a higher high, we have to break that level. So if you made an entry as soon as 1143 broke on January 25th, you had some really nice upside for a couple days. Now this is a bearish reversal spinning top candlestick. This indicates a bit of indecision, and after 4 very bullish days in a row, indecision favors the bears. So if we see a red day on Monday, we will confirm this candlestick, and we'll look to pull back and form a higher low of support. The low of the day of 1198 will be a support level, and then I would be looking at previous resistance, 1143, as a potential entry point for the bulls. I would look at 1150 psychological, and then 1143 previous resistance, now support. So again, a red day on Monday will confirm it. And again, for all the critics of technical analysis out there, can I say it's going to be a red day? No, but I can say that based on this candlestick, the odds are more likely than not that we see a red day on Monday. That's just how technical analysis works. And we have clear little profit taking with an upper wick. It's the most significant upper wick of profit taking we've seen in the past 4 days. And it's showing indecision. So it's the psychology of the candlestick that leads me to believe that we will see a red day on Monday more likely than not. So the weekly time frame, very bullish break, nice increase in volume, and we're just going to look to form a higher low, and then ideally break the high of this move, 1220, to continue heading up to 1318, the all-time high. MJN is also getting very tight. The range I'm watching on MJN is the low of this consolidation, which is 175, and we dropped down to 180 today. So there's a bunch of support between 175 and 180 from all of this tight trading over the past couple weeks, and clear resistance is 189 and 192. So if I were looking for an entry here on MJN, there's 2 styles of a trade. I could make a trade based off support, where let's say I make an entry at 177, 176, and then I put my stop loss below 175. I could put it at 173 to give a little bit of wiggle room, and losing that level would be a clear lower high and then a lower low. So that would stop me out, very little risk. If I wanted to do a different trading style, I would wait for a break of resistance, and I would make an entry once 189 resistance broke to the upside. So those are 2 completely different styles, and one of them is making a play based off support, and the other is making a play based off resistance. The middle Bollinger Band daily support is 178 and ascending, so we would have to lose that level as well as 175 in order to see a bearish break. In the weekly time frame, you can see just how tight we're getting, very, very limited range over the past 3 weeks, and volume is drying up. So we have our high of $2, our lower high of 192, our lower high of 189, and getting very, very tight. You could draw an uptrend line here to be keeping an eye on. I would draw my uptrend line to hit the bottom of the real bodies of the candlestick to make sure no weekly candlestick is closing below that level, hitting the low of those 2 real bodies on those red weeks, that consolidation low, bouncing off of it. And as long as this uptrend line holds on the weekly, the bulls are still in a strong uptrend of higher lows. But the range is so tight, we know a break is imminent. And if we don't get a break of that range, 175 to 189, by next week, by the end of next week, certainly the following week, I would be very surprised if we didn't break by the end of the following week. So that's what we're looking at here on Canadian MJ. And again, volume and volatility is drying up, not nearly as exciting as back in November, but that's never going to keep up. The market reaches an equilibrium, flattens out, and there will be another breakout or a breakdown without a doubt sometime in the next couple of months. And we're just going to be patiently waiting and watching. And this is where learning technical analysis and being able to jump around to other industries, other sectors, other trading opportunities becomes beneficial, because obviously there's no trading opportunity, no clear trading opportunity in the Canadian MJ sector right now. If you're an investor, you've made your decisions and you're fine holding your positions. If you're a swing trader, there's still some opportunity there. But if you're looking to day trade, you're going to have to jump around to other sectors, or just patiently wait and sit on your hands and do nothing, which there's nothing wrong with that as well, but not really exciting. So I appreciate you watching. I hope you have a great weekend, and I'll certainly be making more videos once volatility picks back up, and with volatility comes volume and opportunity and all that fun stuff. So have a great weekend. See you soon.